Sunday, December 1st, 2019, MONERO 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank all my viewers, all my subscribers for their support of the channel through not only donations, through PayPal, Patreon, or through buying merchandise in the MONERO 64 Teespring store, but also for their interaction through comments, through sending me links about stories that actually help me. A lot of the stuff I talk about is because of the viewer, their questions, and yeah, their suggestions as well of things to look at, to read, or watch. So thank you very much. This morning, Sunday morning, I usually don't do a video, but I'm not playing golf today. I played yesterday, so I'm taking a break today. I will be doing my live stream tonight at 9 p.m. London. This morning, though, I want to talk about technical analysis. A lot of times I talk about the bigger picture, like I did yesterday, that people need to accumulate precious metals as, how can I say, savings, right? And not to worry about the short-term picture. But I know many of you are into trading, and I am into trading as well, even though I'm not doing too much trading anymore right now. Things could change. That's how trading is. Sometimes you stop and then you start again. And before I look into the technical picture for gold, silver, the Dow Gold ratio, and Bitcoin, I want to recommend a few books that I've really enjoyed over the years about trading. The other point I would make about trading, if you are looking to trade or you trade already, it needs to be almost a business 24/7. Of course, I was in the markets for over 20 years as a broker. So a lot of times I wasn't trading for myself, but I kind of advise my clients about trading, right? So one of the books that I really enjoy, it's not very technical and it's more a life story, but also great to read to get an idea how trading is not an easy business, right? Is Jesse Livermore, World's Greatest Stock Trader by Richard Smitten, the real life story of the reminiscences of a stock operator legend. So here's the book. This guy, Jesse Livermore, supposed to be the greatest trader ever. He lost and made fortune several times. It just goes to show you before you start down the path of trading what it entails. The other one is The New Market Wizards, Conversations with America's Top Traders by Jack Schwager. There it is. I think there's The Market Wizards as well. This is the new one. I think I used to have the other one, but I don't know where it is. I probably lost it in a move, maybe house move. The other one is, yeah, this one is really interesting, again, because it talks to, it's all these different traders talking about their strategies and what they do, right? So you can pick maybe something that interests you from that book. This is more technical, of course, technical analysis explained. It's more of a technical book. It's not as fun to read as this, but I think every person who trades and uses technical analysis would do well to have Martin Pring's book. Of course, some people just trade. They trade, they watch the markets, they have a feel for it, they get in and out, they don't watch the technicals, but I think it's a good thing to do. It gives you another tool aside from the fundamentals. I'm not going to cover the fundamentals today, but I was just looking at some charts here. For example, the weekly chart of gold here, and I did a Fibonacci retracement, as you can see. Why did I pick 20th of May here, that week of 20th of May? Well, that's because this is when the big rally this year in gold started. And then I picked the top in the beginning of September at 1557, according to this chart here. So I've done a Fibonacci retracement analysis. Many of you probably have seen my videos about the golden mean, how it happens in nature. And I know a lot of you are probably saying technical analysis doesn't matter anymore, the markets are manipulated. But I disagree with that. As you can see here, of course, the golden mean is 61% retracement. It happens in nature. You can Google there, golden mean in nature, 61.8% Fibonacci, and you find a lot of information. I'm not going to go through that right now, but the reciprocal, of course, of 61.8 is 38.2. In the markets, if you go into Wall Street, let's say you could go into a dealing room or in the city of London and you asked one of the traders about the Fibonacci retracement or the 50% retracement, I would guarantee most of them would know about it. So I did this morning because I hadn't looked at this retracement, and lo and behold, this is exactly where gold has bottomed recently. That was the week of the 11th of November with a low around 1446. Of course, things in nature are not exact, just like the seasons. You can have unseasonable weather, right? Yeah, look at the 38.2 retracement of this move, 1447. So it's quite amazing that we held that retracement. Of course, there is like a falling wedge here in this consolidation, and you will see from this book that falling wedges are like patterns in consolidative pattern in a trend. So the trend since end of May, middle of May has been up. So this falling wedge, of course, is a consolidation. I know when was it? End of October, it looked like we were breaking out of this falling wedge and we failed, right? But we're getting also near the apex or the end of the falling wedge. So I expect things to be kind of settled soon in the next few weeks, either up or down. The probability of the market resuming its upward trend is 3 and 4. That's what Pring talks about in his technical analysis explained. So it's not guaranteed. I'm not saying gold is going to spike higher, but I would say if I had to bet on it, it will. So we're almost spiking out of that top trend line again here. So that's the gold chart. Just wanted to look at the Dow gold ratio because that's important. I've spoken about it in the last couple of weeks or so. And I think the stock market is probably topping in the short term. Yes, it could go a lot higher in the medium term, even though I personally don't think it will. And basically the Dow gold ratio is the strength of the stock market versus an ounce of gold. And you can see there that towards the end of August, the stock market bottomed in terms of gold, and it's been rallying. But I think we're starting to see that, how can I say, top is starting to lose momentum. So I expect that ratio to come down. It could come down by gold going up faster than the stock market, or by the stock market going down and gold not doing anything, or also rising, right? So that's the Dow gold ratio. The other important ratio that I think gives us an indication about the precious metals in general is the gold silver ratio, which of course was highly elevated up until gold started rallying in May this year, right? And when that happens, you want to see the gold silver ratio go down. You want to see silver outperform. And I've done another Fibonacci analysis here from the top of that ratio to the bottom, and look at how we've been really stuck here in this 50% retracement. So you talk to traders on Wall Street in the City of London, they will always say that a lot of times markets get stuck between the 50% and the 38%, or the 50% and 61.8%. And that's what it looks like we're doing right now. I think, yeah, we need to keep an eye on this. I think this is going to drop, and probability that silver will outperform and precious metals will rise. Let's have a look at the Bitcoin chart. About 2 weeks ago, I did an interview with Crypto Rich, and I told him that we'd broken back below the top of the falling wedge. Falling wedge had been, how can I say, Bitcoin had broken out of it back in end of October. But when I was speaking to him, it was breaking back below that line. I said we could go back down to 6,500 or 6,000. Lo and behold, we did go there, just below it. It's bounced. And then I also said we need to go back above the top line for Bitcoin to resume its move higher. And lo and behold, look where we hit here. And now it's coming back down. So Bitcoin not out of the woods yet. Right now it's still within this falling wedge. We could go back down towards that 6.5, even lower as the falling wedge moves with time. So that's where I think you need to keep an eye on. Yeah, of course, ideally we need to go back above 8,000 really to see this consolidation end in Bitcoin. Before I finish, just want to talk about a story I saw. Some of you might have seen about a big trader or hedge fund, whoever, buying or putting on a trade, buying calls in gold. I think the expiry is sometime next year, or I'm not sure the expiry or the maturity of the option, but they bought 4,000 calls, which means that they have the option to buy gold at 4,000, and they have a certain amount of time for that to happen. They paid $3.50 for it, right? So before those options expire, if gold doesn't get to $4,003.50, they will lose all the 1.5 million that I think they bet on. Don't know how many. I think they bought, was it 15? I'm not sure how many options they bought. The point being here is that the other thing about that trade is that gold doesn't have to go to 4,000 within that time, right? Because I used to trade options and I used to do a lot of options broking. What you need really for that trade to do well is maybe to see a big spike in gold higher, let's say within the next month or two, and that option could be worth like 7.5. And you might ask, how come if it's not at 4,000? Well, even if it spikes, let's say next week to, let's say 1650, and it's way far away from the 4,000 strike, you could see that option become worth like 5.5 or 6. And how does that happen? Well, because the option would still have a lot of time left, and you've got a lot of volatility in gold. When the market goes up, actually volatility goes up. It's not like the stock market. So that's the other thing they could be thinking. They might not be thinking that gold will go to 4,000. They just thought they did a little bit of options horizon analysis, which is something I used to do on my Bloomberg terminal at work. I don't have a Bloomberg terminal anymore because it's too expensive and I don't really need it. But you just punch in the numbers and you do like scenarios. So if gold were to spike to make new highs for the year in the next month, you could see that trade work out well. They could double their money. So it doesn't mean necessarily that they think the gold price is going to 4,000. They could be using that just as a leverage play, right? Just wanted to cover that. If you are confused about what I said, ask some questions in the comments and I'll try to answer them. If you enjoyed this video, make sure you hit the like button, share it far and wide, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great Sunday. And live stream 9 p.m. London time, 4 p.m. Eastern time tonight. I'll talk to you later. Bye.